Good morning, guys, afternoon or evening, all in crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update, and we've got quite a lot to get through. The US stock market was indeed closed yesterday for Martin Luther King Day. However, it will be opening today, and we've kind of speculated that actually this week you may get a bit of a pullback. Looking at where the S&P is and the fact that it's right up against resistance, could put a toe above it. But I do expect some sort of reaction here. I think people will take that trade. And also the dollar potentially at significant support or historical support. So we'll see what happens here. The cryptocurrency market is doing very, very well. We are going to look and drop down the time frames. I think there is the possibility that you're setting up some sort of a reverse head and shoulders right now. And this could give you targets, up 25K and above. But we will get onto that when we do a little bit of TA. Just highlighting this is something we've been highlighting for a while now. We've said we have to take this serious. Right down when we were back at these levels, and that's this bullish divergence on the RSI. People don't like RSIs. I think they're great to look at a weekly time frame, or weekly is probably the best time frame to look at them on to try and predict sort of the trends and are they strong? Are they weak? Are they likely to come to an end or vulnerable? And that's what we've essentially assessed with this bullish divergence on the RSI. There are a number of other divergences on a number of other indicators, like the money flow, and we can talk about a number of other things. But there's a lot going on. And really, as we're getting these lower inflation numbers, people are all looking forwards and looking at the Federal Reserve and sort of saying, okay, well, we're kind of already priced in where rates are going to get to, and actually they may not get as far as was once speculated, and markets are readjusting as a result of it. That's why you've had this rally. They're kind of looking forwards, which is what markets do, and kind of saying, okay, well, maybe the worst, which was very much on the cards, actually isn't going to play out, and now let's look to reallocate for something different. This was Credit Suisse's chairman. I see no global recession. There's the huge narrative shift on the back end of that lower print. Anybody that's been watching me for a while now, we spoke about the US 2-year yields and how this leads inflation. Okay, so what I have on here is this is the Fed funds rate. Let me find the yield. So this is the yields, which we had sort of estimated topped out round about here. Which would be 4.9-ish, 4.8. We said, actually, if you look at these, they're very, very correlated, overlaying the Fed funds rate. And this is probably means that the worst is behind us. And this is, we made decisions at the start of the year. We've actually came out and said that at the start of the year, we weren't bearish. We weren't necessarily bullish, but we were going to let the market show us its hand. And that likely the worst in terms of the economic situation was behind us. We're now just waiting for potentially what the yield curve may or may not be predicting, which, of course, is a crash at some point. But that doesn't have to come potentially until the yield curve is uninverted. We will see. But you can see actually on the lower print, we've got, this is sort of the forecast. New consensus is Fed hike 50 basis points in the first half of 2023 and cut by 200, so 2 points over the next 12 or 18 months. So markets are now pricing in those rate cuts down the line and adjusting capital accordingly. You have to understand this, guys. I talk about it every single week with my patrons in a lot more detail. We go over it and look at the macroeconomic situation. And this is simply why markets are getting a bid across the board, not just crypto. The S&P is doing rather well, although it's at resistance right now. And of course, the dollar is getting hammered, but the dollar is getting hammered really for internal reasons. We've got the debt ceiling that apparently is going to get reached on Thursday. This means they may have to up that debt ceiling. Which essentially means it's more inflationary for the dollar against other currencies. Also, there is a lot of what's going on in Japan right now with their debt ceiling or their yield curve control. It's all over the place, and there's lots of internal things taking place. So there's been a huge repricing. People are now putting money back into markets. There's been sort of technical, potentially, reasons why there's been a fundamental shift. Remember, we looked at the Heikin-Ashi candles yesterday, and we essentially said, if this closes green, expect another one. What we're going to do is drop down the time frames. I'm going to show you potentially a target if we're setting up a reverse head and shoulders on the 1 hourly that Bitcoin may look to move to, providing a number of things happen. I still think it's quite likely you're going to get a pullback this week. It doesn't have to happen. There's lots going on internally across markets, so it's quite hard to call. This was another tweet before we get on to the TA. Feedback from large investment bank conference here in London. Most consensus views the Fed is done. Inflation is coming down hard. Recession avoided. Most consensus trade long EM. That means emerging markets. Bitcoin calls, we shared this yesterday. So there's more actual people bullish on Bitcoin over the next 6 months. 6 months calls are actually positive over the puts. So there's more people long than short. And this is quite an institutional thing. We also looked at grayscales as a potentially leading indicator, which actually it may pay us to take a look at that today. But of course, that's not going to open. I don't know if we got pre-market. I don't think it gives us pre-market just yet, having been at a real discount. What else have we got? The year of inflection. Top bank CEOs weighing on inflation outlook. Investors have met a recent deluge of promising data from major economies with cautious optimism, with inflation print indication that consumer price increase may be coming back to earth. Speaking on CNBC on the sidelines of the World Economic Forum, Hammers suggests markets should wait for more rounds of key data points. Of course, markets won't, because everyone needs, this FOMO kind of effect before determining falling inflation has become a trend. So it's a double-edged sword, inflation, because even though it's coming down, the problem is what happens if you do get a resurgence in it. That's going to be an issue. And what we're trying to do on this channel is really teach you guys to fish. We made our decision towards the start of the year whether we were going to catch this or not. I did release a video in regards to Cardano yesterday, looking at a video that I made on the 5th of January for my Patreons, where we were potentially looking at buying certain cryptos. And then we had said in Ada's case, we actually went ahead and did that. And, the 5th of January, by the way, guys, just to show you on Bitcoin, was here. We're not like these other channels, by the way, ladies and gentlemen. This is something that I take very, very seriously in regards to trying to be correct with my analysis and play the markets. I'm, not really giving away 100% my positions because it's not really that relevant. But a lot of the information that we looked at, and if you go to you can literally go back from the 1st of January and watch the videos that we put on from then. We've kind of echoed this cautiously optimistic tone, which seems to be the market sentiment, even though we hadn't quite had the CPI, which is really what catapults things, and so on. So this was also something interesting. I don't know why I incorporated this, because it probably won't make that much sense to many people, but Chinese credit versus global inflation, quite telling, isn't it? That you've essentially got the world's economy, inflation, and then you've got the Chinese credit impulse. So maybe China's quite a leader in terms of inflation and global inflation. Davos 2023, crypto's down, but not out. The crypto industry, it came back to Davos for the World Economic Forum's annual meeting, daunted but undeterred. So crypto's not going anywhere, guys. It is the future, in my opinion, and it's going to do extremely well. It's just a case of, with any technological revolution, really, they need to regulate it, and then they're going to allow it to run deep. And I actually think that if you look at if the worst in terms of the macroeconomic situation that's being caused by rate hikes is behind us and inflation, then actually, people are going to price that in, and they're going to go for sectors where they see huge amounts of growth and value. And I think crypto is exactly that. So on the hourly time frame, guys, this is something that I'm looking at, and it essentially is potentially a head and shoulders that may form. So in my opinion, I'd like to see a pullback. You've ran up here, but the problem you've got is actually, if you drop down the time frame, this looks like quite strong structure. You could potentially, this kind of descending triangle. So maybe that already is the right shoulder, potentially. And this, of course, would be a head. Let's get a bit more time on the chart so we can see this a bit more clearly. And this would be your left shoulder. If you break this, potentially, doesn't have to happen, you could be looking, giving you a rough target. Let's put it on log and just make sure that that's right. Coming back to 30k, potentially. Now, I'm not necessarily calling that. It's a brave call to make. But it is on the cards. And actually, that would take out a lot of this insufficiency here. How that looks, it's not going to go straight up. Maybe have some sort of a pullback, and then we see something like this, you know, some sort of a drawn out trace move and a move up like that. It really all depends on the macroeconomic situation. It depends on the dollar. It depends on the stock market. It depends on everything as a whole and sort of the situation moving forwards. But we're going to keep you as up to date as possible on that on this channel. One thing to really worry about, though, is I can't help but feel... Let's get a daily time frame on for this. Like, this is due a pullback. As in, from the downtrend, you're looking to get some sort of a strength element here. Maybe it does something like that, and then you get that, and then that probably translates over to Bitcoin land with a sort of deeper drawdown, and then that spring up. We will see, but we will certainly keep you up to date on that on this channel. Remember, this is all macro inflationary data, Fed driven. The Fed are the mass manipulators of markets. But there is certainly more of a positive tune going into 2023 than I've seen in a long time, and also market. And you've got to, that definitely translates over to market. So we do absolutely expect a pullback. I'm not calling for anybody to FOMO in here whatsoever. Something I'll be watching like a hawk, obviously for my Patreon, and then of course, you know, you guys will get daily updates on it on here. That's all I've got for you in this video, guys. If you enjoyed the content, a like is always greatly appreciated. So is a comment, and I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, ladies and gents.